Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news high and rising inflation in Australia is leaving their central bank with some tough choices. But first, US mortgage applications rose last week from the prior week, a third week of improvement, while mortgage interest rates remained largely unchanged. But year on year, the variations are still very negative. The Canadian Central Bank raised its target for its overnight rate by 25 basis points overnight to 4.5% as expected, and signalled the end of its current aggressive tightening phase. However, it is still continuing to sell down bonds. And China might be on holiday this week, but their weather is becoming a story there. Temperatures have dived, and that has caught out their energy systems to supply enough heating in some key regions and cities. Local governments, starved for cash after enormous spending on their COVID zero measures, cannot afford to keep up adequate supplies of natural gas. And they're in no position to bring in subsidies, which have been a strategy in the past to make heating and cooking more affordable in winter. As the pandemic spreads illness, the cold is adding to the misery of millions. There are problems in China right now that they just don't need. In Australia, their CPI rose 7.8% in the end of December. That was above market expectations and its highest since 1990. The most significant price rises were domestic travel up 13%, electricity up 9%, international travel up 8%, and food prices rose 9% there. The RBA next reviews its cash rate target on Tuesday, February the 7th, and it is more likely to be a substantial rise now and to be followed by more big ones. And that in turn may affect the RBNZ's thinking for its February 23rd monetary policy review. And the RBA seems to be at an inflection point with tough choices: either go hard and risk a recession, or hold off and risk a wage price spiral. And staying in Australia, their new home market is retreating faster. Sales of new homes fell 4.6% in December, leaving sales in the final quarter of 2022 a remarkable 42% lower than the same time in 2021. Anecdotal data in New Zealand suggests a similar pattern is developing here in 2023. And the US Treasury 10-year yield starts today at 3.46%, a little change from this time yesterday. And the price of gold will open today at $1,936 an ounce, and that's up another $5 from this time yesterday. And oil prices start today up $1 at just under $81 a barrel in the US, while the international Brent price is little changed at $86.50 a barrel. And the Kiwi dollar has fallen by 0.5 cent from this time yesterday, now at 64.6 US cents. Against the Australian dollar, we start today down a full 1 cent at 91.3 Australian cents. Against the euro, we're down 0.5 cent at 59.3 euro cents. That all means our trade-weighted index starts today at 71.2 and down 70 basis points from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.